In March 2025, the Trump administration quietly introduced a piece of legislation that could fundamentally redefine the concept of money in the United States. It wasn't a tax reform or a spending package. It was the Digital Dollar Act. Officially, the bill is framed as a step toward modernization, efficiency, and combating financial crime. But beneath the surface lies something far more consequential: a complete restructuring of financial power and government oversight. At its core, the proposal introduces a tool that enables full visibility into every transaction, programmable controls embedded directly into the currency, the ability to freeze, restrict, or eliminate your purchasing power with a single command. This isn't speculation, nor is it conspiracy theory. These are explicit design features of central bank digital currencies (CBDCs), and governments around the world are already deploying them. China's digital yuan, launched in 2020, now tracks the spending of more than 260 million users. Nigeria's Naira, introduced in 2021, has been used to enforce capital controls and limit citizens' access to foreign currency. The Bahamas' Sand Dollar monitors every transaction within its borders. Sweden, the European Union, India, Brazil, over 130 countries are developing or testing CBDCs. And now, the United States is preparing to join them. What makes the American version uniquely powerful is the role of the US dollar in global finance. The dollar represents 60% of all international trade settlements, the pricing standard for most major commodities, the backbone of global banking systems. A US CBDC wouldn't just reshape domestic transactions, it would build the infrastructure for monitoring and potentially controlling global commerce. This is poised to become the largest expansion of governmental financial authority in modern history, introduced under the reassuring banners of innovation and security. Before examining what the Digital Dollar Act actually proposes, it's essential to understand what a CBDC is and how it differs from the digital money we already use. What a CBDC actually is. Today, when you use a credit card or make a bank transfer, the transaction is digital, but it travels through private financial institutions. You hold an account at a bank. The bank holds dollars. When you spend, the bank adjusts balances and records the transaction. The Federal Reserve only sees this data when banks are required to report it. A CBDC eliminates this system entirely. With a CBDC, individuals and businesses would hold accounts directly with the Federal Reserve. Every transaction, every purchase, every payment, every transfer would be recorded on the central bank's ledger in real time. There is no intermediary, no buffer. You would be transacting directly with the US government. This structure introduces three unprecedented capabilities. 1. Total financial surveillance. The government would have access to a complete, detailed record of every transaction. Where you shop, what you buy, who you pay, who pays you. Not aggregated statistics, individual, searchable, permanent financial footprints. Your morning coffee, your political donations, your legal fees, medical payments, or personal relationships. Every transaction, forever. 2. Programmable money. Unlike physical cash or traditional digital dollars, CBDCs can be embedded with programmable rules. For example, expiring money, funds that disappear if unused by a specific date, and economic tool, already proposed to stimulate spending in downturns. Purchase restrictions, preventing CBDC use for certain categories: alcohol, firearms, carbon-intensive products, or any other undesirable goods. Geofencing, limiting where money can be spent inside a city, state, or country. Social behavior controls, advantages for compliant citizens and restrictions for those who fall outside acceptable norms. The currency becomes not just a medium of exchange, but a tool for behavioral governance. 3. Immediate enforcement power. With a CBDC, the government could deduct taxes automatically, freeze accounts instantly, impose penalties without judicial process, seize or delete funds at will. Your money becomes a permission asset. You can use it only for as long as the central bank allows. Current financial systems have legal and procedural safeguards, court orders, due process, institutional oversight. A CBDC eliminates these barriers with automated, centralized control. They often claim that your money cannot be programmed to restrict purchases, and that freezing accounts always requires legal due process. But with a central bank digital currency, those safeguards evaporate. You are no longer using money held by a private bank, money governed by long-established legal protections. You are using government-issued, government-controlled currency, and the rules are whatever the government decides they are. To understand the implications, you don't need theory. You only need to look at the countries that already operate live CBDC systems. China, Nigeria, and the Bahamas offer real-world case studies of how Programmable money transforms from a convenience into a mechanism of control. China, the digital yuan ECNY. China launched its digital yuan, the ECNY, in 2020. At first, adoption was voluntary. The government encouraged usage through subsidies, promotional campaigns, and seamless integration with major platforms like WeChat and Alipay. By 2024, over 160 million Chinese citizens held digital yuan wallets. Annual transaction volume surpassed $250 billion. On the surface, the benefits were obvious: faster payments, no physical cash, and easy cross-border transfers. But behind that convenience was a comprehensive control infrastructure. Every ECNY transaction is recorded in the People's Bank of China's centralized database. The government can monitor spending patterns in real time. This financial data is integrated with China's social credit system, enabling automated penalties for undesirable purchases. A lower social credit score results in restricted access to public services, travel limitations, reduced internet speeds, difficulty securing loans or housing. The digital yuan makes these consequences instant. The most dramatic shift occurred in 2023, when China confronted large capital outflows. Citizens were attempting to move money abroad as the economy weakened. In response, the government programmed capital controls directly into the currency. Digital yuan cannot be converted to foreign currency without approval. Digital yuan cannot be transferred to overseas accounts. Paper currency could be smuggled out of the country. Digital currency cannot. The code itself prevents it. China also tested expiring money. During economic slowdowns, citizens were issued digital yuan that vanished if not spent within 30 days. Saving was impossible. Consumption became compulsory. Economists praised this as innovative monetary policy. Many citizens experienced it as coercion. Gives images prompt serials. Y's and images prompt combined to each other, and every images prompt post-impressionist. The Bahamas, the sand dollar. The Bahamas launched the sand dollar in 2020, citing the challenge of serving remote islands with limited banking infrastructure. The digital currency works well. Transactions are fast, reliable, and low cost. But the Central Bank of the Bahamas now has the ability to monitor every transaction conducted in the country. The government insists it does not use the system for surveillance. Yet the infrastructure exists permanently. And when infrastructure exists, history shows it eventually gets used. The global pattern. Across these three nations, the template is consistent. 1. CBDCs are introduced under the guise of convenience, innovation, or financial inclusion. 2. Adoption begins voluntarily, supported by incentives. 3. Once usage reaches a critical threshold, programmable restrictions begin. Capital controls, purchase limitations, expiring funds, geographic spending boundaries. 4. Cash is gradually phased out, and alternatives such as cryptocurrency are restricted or banned. 5. Citizens realize too late that their money no longer belongs to them. It belongs to the government, and access depends entirely on compliance. Gives images prompt serials Y's and every images prompt combined to each other, and every images prompt post-impressionist.